What's going on, everybody? Happy Saturday. Ow! Just smacked my hand on my table. That hurt. Hope you're all doing well. Beautiful weekend we're having. The weather here in Kansas City is getting nice. It's shorts weather today, but just like we always get the four seasons oftentimes within the same week or even the same day. We do have a little bit of I think a snowstorm coming up tomorrow. So the temperature's supposed to really drop, but then turn around and come right back to spring weather immediately thereafter. That is Kansas for you. That is all four seasons wrapped up into just a day or two. So looking forward to that. Except for the allergies. Not looking forward to that. The allergies get me every single time it goes from hot to cold or cold to hot. So that's just something I'm going to have to live with, but it's okay. Seems like the older I get, it starts getting a little easier. But anyway, back to the week. That is the markets, guys. Today is the 14th. Tomorrow, Sunday, the 15th. So markets will be back open here in the States tomorrow evening here in the States. Obviously, that'll be the morning of the 16th across the pond for you guys over in the Asian area, European area. So, with that having said, I just thought I would take a quick look at some 30,000 foot view items for the day. Um, and it started out this morning when I woke up. I always, and I know I've mentioned this to you guys. First thing I always see is Yahoo Finance. I just like to get a look here and just get a very, very top level understanding of what's in the news and what could potentially be, you know, encouraging more novice traders to be jumping in and out of specific markets. So, one thing I did see, which was kind of interesting, was Scottie Pippen, guys. If you remember Scottie Pippen from the Chicago Bulls, he played with Michael Jordan back in the late 80s, early 90s, brought all the championships to the city of Chicago in the National Basketball Association. I saw Scottie Pippen's name there, so I thought I'd click on it. It's kind of interesting. He actually was, I guess, hired or asked to step in to bring a little bit of a celebrity presence to the CME. The CME is actually trying to get involved in the betting markets, um, uh, which would potentially be the first one through a through an exchange, from what I'm understanding. But yeah, CME is getting involved in the prop markets. I did a little digging a little deeper over here on Grok. So this is the prediction markets, and yeah, like I said, they brought in Scottie Pippen to just show up to kind of bring some eyeballs to it, but he doesn't apparently have a role at all in this. It just appears that they just want the presence, the celebrity presence. But anyway, yeah, they're trying to basically get into the prediction markets. Um, and so, uh, yeah, right here, just looking at these notes here, trying to push it into the Wall Street guys. It's not currently in Wall Street, but it's something that they're attempting to do. I thought that was quite interesting. You think about like Kalshi and Poly markets. That's obviously the well-known ones out right now. So, look, whatever brings more money, right? That's basically what they're looking at. What CME's looking at. Hey, how can we make more money? So let's enter the world of poly markets and Kalshi and see if we can come up with our own setup. So interesting stuff on that. But anyway, yeah, just kind of a recap of the war so far, guys. Doing a little digging over here at Wikipedia. Now, you guys know Wikipedia, anybody can write this stuff. I know they get kind of picky at times, but just looking at a basic 30,000 foot view of it, it's pretty interesting. It's pretty simplified, I would say, as far as giving you a top down analysis of it, um, just from the reality of everything that's happened. So what I like to use Wikipedia for is just taking a look at the Iran war. You can just type that in, search engine 2026 Iran war, and it'll bring it up, what's currently going on over there. And one thing I like about it is over here on the left, if you click on hostilities, it'll actually kind of break down a week by week um, of what's happened, kind of a timeline, if you will. So, obviously the start of Operation Epic Fury a couple weeks ago. You get into the second week, and that's where the third aircraft carrier has made its way over to the Red Sea. So, really just continuing to stack up the presence over there, guys, military presence, trying to knock out Iran and their missile shooting capabilities. So, looking over here at the start of the third week, uh, guys, really to end the second week, The U.S. did bomb Kharg Island, which is the kind of the epicenter, if you will, on the epicenter on where Iran has all their oil storage. So just in going to my maps over here, I just thought I would show you guys real quickly where that's at. Okay, looking over here at Iran right here. And obviously we've got the Strait of Hormuz right here. But if you kind of zoom into this little island right here, and I don't know why that's, I don't know why that's going so slow. But this is the island in question. This is where the U.S. Dropped bombs like crazy yesterday. And from what it sounds like, if you see right here in the center, that's where the oil is. That's where all the oil containers are and storage and all that. Sounds to me like they did not touch that. They actually just kind of took away everything around it, knocking out the military capabilities of Iran, and just because of the Strait of Hormuz threats that they keep doing. I mean, they keep trying to knock out all the oil tankers. So that's kind of the U.S.'s way of retaliating, if you will. Prices have obviously rose quite a bit since the start of the war, but every time Iran bombs a tanker, guys, it just makes it even worse, right? So yeah, that was the U.S. retaliation. 90 military targets were struck over there on the island alone. So a little tiny island, but again, that's the bulk. That's their crown jewel. Yeah, that's Iran's crown jewel of their oil storage capabilities and all that. So yeah, we'll see how that works out for the rest of the year or the rest of this period. So hopefully that crap gets knocked out at some point. I mean, just in looking, I did a little bit of a search as well on the escalation. I like to utilize Grok to help me out. Just kind of simplifies and speeds the process up of markets. So just taking a look over here, basically what I asked it was, hey, it's 4 o'clock. I gave it the exact time. Give me a market update for geopolitics and how the upcoming week's high impact red folder economic calendar events may shape the markets in general. And then, of course, I gave them the top setups for May 1, the Edge Finder. I just wanted to have it finish out by telling me a basic understanding of what we could expect there. So here's what I got, guys. Markets remain in a tense, risk-off, dominated environment as of today. Obviously, the war is in its third week, continues dictating sentiment. Strait of Hormuz is still heavily disrupted, obviously. The traffic has largely stalled. There's some stuff getting through, but not a whole lot. Everybody's afraid to go through there, guys. It's a little bit sketchy. Now, it's a 22-mile wide strip of land, talking about the map over here. If we zoom back out and just kind of go back to the Hormuz, okay, the narrowest point, the choke point, if you will, is about a 20-mile stretch. Okay, going across here. Obviously, this is a little island as well coming off of Iran, so it's just a little bit sketchy coming around the corner. Okay, so yeah, you got to have balls at the moment to be kind of swinging around to get to the oil facilities. But anyway, so yeah, some vessels are allowed to come through. Like it says, there's some Indian vessels, but what else did I want to say on this? Or yeah, and a lot of it's again, it's because of the mining, guys. I mean, the U.S. took out something like 11, 12 boats the other day, mining boats. Okay, trying to get rid of them. The Navy is screwed over there. Their Air Force is screwed, and I think they're down to like I think it's like 90 to 95% of the missiles. The daily shooting is down 90 to 95% compared to day one of Iran's reaction to the war. So they're definitely slowing down over there. So here we go. One day. Yeah, talk about that Canada inflation number we looked at. Projected increase. Okay, inflation in Canada looks like they're projected to go from zeros up to 0.7%. So obviously that would be a good thing for the Canada dollar, for the loonie, but negative for their their everyday buying and selling of goods and services. And there's the cash rate decision for Australia that we talked about, where they are projected to increase by 25 basis points, 385 to 410. We'll listen to the lip flap in session thereafter. This is Monday night, Monday evening here in the States. Obviously, early morning hours over there in London, and then mid late morning for the Asian markets. So that is Monday. Nothing on Tuesday. As far as Wednesday goes, we do have our own rate statement coming out. 375 guys, they are projected to remain the same. In fact, when I looked at CME, I did not see where there was any projections to drop rates until later in the year. So there you go. I mean, this is the decision coming up next week. 98% chance of remaining at the 375 on the high side. And then looking at the calendar up here, it stays at 375 all the way up until towards the end of the year. Right here, guys. Literally, the last meeting of the year, December 9th, is the first time we see that projection to drop another 25 basis points. So there was one point where we had, I believe, 2 price cuts, on the on this sheet over here, showing the percentage chances of this stuff. And then even this is really calmed down. I mean, this percentage was much higher, just within a day or a few days ago, guys. This was a lot higher, but now you can see it's almost a chance of 0 rate cuts. So, potential. Obviously, when you get into oil, you get the oil prices jacked up like they are right now. Potential for obviously higher inflation. So the market's pricing in that they're going to be a lot more careful on this stuff. It's kind of a balancing act. Nobody knows how long this war is going to last over here. I mean, President Trump says, the initial thought was 4 to 5 weeks was kind of the range being thrown out. You get a lot of critics thinking he's going to put us in a forever war. I don't think so. I really doubt that. I mean, he's got a legacy that he's personally definitely concerned with and worried about. So he definitely doesn't want this thing to go any farther or any longer than it has to. So I think they'll get this crap settled. Okay. That's exactly what it is, crap. But hey, at the end of the day, when you got somebody chanting death to America, you can't be letting them sit around. I'm sorry. I don't know if that's a hot take or not, but I definitely agree with what they're doing now. It's got to be done. It's either do it now or wait a year, wait 5 years, wait 10 years when Iran has built up their capabilities again, guys. And then it's 10 times, 100 times harder, right? So kick them while they're down, knock out the nonsense, get rid of the death to America stuff. And then, think about it. I mean, it's been 47 years that presidents have talked about it, but nobody's been about it until now. So you can't really argue with that. I mean, yeah, again, it's a hot take. There's people on both sides of this issue, but I'd rather get that crap knocked out now than have to worry about it 5, 10 years. Okay. Again, once they've built up their capabilities, perhaps built up their nuclear abilities again. So knock it out. Hopefully they get some new people, in there to actually do the right things, grow a democracy or whatever way of life they choose to live, and just make it a little more on the peaceful side, guys. So anyway, that's my tangent on that. But the war continues. So we're going to have some volatility. We're going to have some, a lot of ups, a lot of downs, and it is what it is. I mean, at the end of the day, we trade price action. We trade price action, guys. So whether there's a war or not, okay, whether the dollar is going up or not, whether stocks are going up or down, gold, silver, Bitcoin, whether it's going up or down, there's a way to make money in the market. So, at the end of the day, it really doesn't matter. Now, obviously, the high volatility, is what we like at times. We like to get the volatility so we can get into those trades and have them move. The last thing we want is prices just to go straight sideways forever. Okay. Very stagnant. We don't want that. We want volatility. We just don't want too much volatility. Okay. So again, it would be nice, obviously, for humanity's sake, that they get this crap knocked off, this crap done, they get the war over with, and get back to business. So, but that's the hand we're dealt right now. And did want to take a quick look over here. Financial juice. Just, this is not something that you necessarily want to see if you're in Israel, that they're running critically low on interceptors. So, financial juice guys, they're really good about getting this stuff on here. Kind of a squawk idea, kind of like a squawk news idea. But there you go. Okay, that's not looking good for them. Iran's RGC warns U.S. moves regions to move away from factories. Okay, warns U.S. to move industries from region and urges people to move away from factories in which U.S. holds share. Okay, so yeah, they're obviously anti-U.S. That's the state media. And that's one other thing I wanted to point out, guys. When you're looking over here at Wikipedia, it's important to go down here and check the sources of this stuff. So obviously, like Kharg Island, okay, the bombings over there yesterday, it's important just to check the sources to make sure that they're not just some National Enquirer type of crap. Okay? Make sure they're a decent source. So that's the caveat to utilizing Wikipedia, where anybody can go and write these articles. It's always good to check the sources, okay, to verify that it's coming from legit sources. Okay? So anyway, thought I would point that out as well. What else I got over here? Is there anything else of note over here? Okay, drone strikes targeting refinery in Iraq. Not good. Trump admin rejects attempts to initiate Iran ceasefire talks. Yeah, I mean, President Trump's already said the unconditional surrender. That's the only thing he's after. So that's not a surprising thing there. Oil. Yeah, there's a lot of oil news on here, guys. Probably going to see oil continue to go up. I think the Edge Finder even gave us a bullish signal, +5. So there you are. Bullish 5, guys. When you start messing with supply, okay, supply shocks, when you start messing with supply and potentially making it less, well, that's where you're going to have raising oil prices. So let's take a look at oil real quick. Here you go. I mean, we obviously had the big spike on the news of the war. We had some sell-off, some profit taking. The fact that Khamenei was killed, okay, that kind of relieves some of the markets. But then we had this basing action, and now we've got some new highs. So new oil highs, talking about this most recent price action after we bounced into this demand zone down here, guys. Okay, we wicked in, and we've just been going up ever since. So I like oil. I really like oil a lot. This is a 4-hour chart. Let me get my double chart over here. Okay, so over here on the right, just taking a look, we do have our 8 EMA above our 21. So that's a mechanical confirmation that we're bullish. Obviously, Edge Finder's giving us a bullish signal too. And after the big spikes, after the war started, actually down here, okay, we kind of settled in a price about $20 more expensive than where we were at. So a little bit of that, fair value, if you will, fair value area, fair market value. They talk about the Tuesday candle, the Wednesday candle, kind of balancing out there, and then of course we had our big shoot up. So yeah, I mean, if I'm looking at oil, I want to find a demand zone. I want to find a discount because it's pretty expensive right here, guys. So for me, I like to make sure my 50 EMA is above my 200 EMA over here on my execution chart, my execution time frame. And ultimately, I want it to pierce the 200, which is way down here. Now, 15 is about the lowest I'll go. Talking about a little bit more of a scalpy time frame. Do I have a demand zone here where the 200 is? Not really. We do have some volume spread analysis candle growth, so I do like that. Let me go back to a 1 hour real quick. Yeah, just not really a good looking demand there. That's the only problem. I mean, maybe we could look at this candle here. This is a 2-hour chart. This is a 2-hour chart. Okay. What does that look like on a smaller time frame? Do I have any gaps, any fair value gaps down here in this box? Not really. There's a gap here for sure. Okay, there's a gap. What's it look like on a 15? Okay, on a 15, tiny gap there. Yeah, see, there's no gaps down here. So I don't really have a whole lot of lower time frame confluence. Now, price really isn't that far away relative to some of the other zones. So I would actually be okay looking a little bit deeper down. 10 minutes, 5 minutes is the lowest I go, guys. Absolute lowest. And yeah, I still don't see any gaps. This is an efficient market through here on the smaller time frames, right? So we got our gap on the 2-hour. Remember, that's the box. But just dropping down to smaller time frames, not really seeing it. Now, The only gap I see is basically the same as where the 2-hour starts. And that's right here. Okay, here's our 5 minutes. On our 5-minute chart, there's a gap. Okay, that is a fair value gap right here. See that gap? That's because this top candle here, wrap our rectangle from there to the bottom of the second candle. So we ignore the leg out candle. And that's what it looks like. And it looks a little better, actually. About the same on a 10-minute. Going back to the 15, see there's a gap. Let's go back to the 30-minute, and the gap looks a little better. Okay, the gap here would be the top of this candle to the bottom of this candle. So I'm going to stick with this area. Because, yeah, there are a couple gaps. And they're basically at the same proximal line as the higher time frame that I started with, which was the 2-hour. See, on a 2-hour, the gap looks great. We're going from here to here. So there's your gap. There's your inefficiency. Inefficiency in the market. Now, because we're so close, okay, it's probably a little aggressive. But I mean, look, we've kind of, we're kind of following that trend, a little bit of uptrend. Higher highs, higher lows. Simple retracement down since we are now on the +5 score on EdgeFinder. I'll put an alert there. I'm going to put an alert there and see what happens when the market opens tomorrow. What did I do? Just messed something up. Okay. So I need to put my alert there. Get my alert set, and that way I don't forget about that spot tomorrow when the market opens. All right. We're good, guys. There's my alert on oil. Now, again, I think this is a little bit of an aggressive play because EdgeFinder does only give us a +5. So it is on our bullish list, but just barely. Just barely. It's not like it's a +8, +9, +10. So, yeah, that's definitely, I think, a very aggressive trade. But if I wanted to be a little more conservative, turn off my master pattern real quick. Yeah, see, there's no 4-hour demand zones that are closed because the only one we had was the one that already touched and pushed price up. So that's down here. There's just nothing else. Yeah, 2-hour, not really a whole lot of anything else. Okay, we had a 1-hour down here, but I didn't like it from the get-go because price did not break this structure over here at all, and it just got lazy. But still worked out because it actually did touch it a couple times before pushing up. Now we come to this 1-hour zone here, which I do believe is where, I actually need to add my box there. So yeah, we got this one here. What about this demand? Will this work? Leg out candle green. There's a green, there's a green, there's a green. There's a few green candles coming out of there. And we did break this structure. I just wished it would have closed. We just got wicked through and then it rejected, came back down for a while before finally pushing up and closing. So yes, this is a demand. Yes, I do want to watch it. That would obviously be a little bit higher probability than the one I drew up already, where I have my alert. But I just want to see what happens. I want to go to a 15-minute chart when price comes down. And if we come down into the demand, as long as the 50 remains above the 200, and preferably I would like to see the RSI drop to the 20 level, okay, get a little bit of an oversold reading. Price bounce in, get us a 15 or a 30-minute bullish candle close up. Might be in this trade. But I can promise you, there's probably going to be a lot of other ideas that are going to be better just because of how volatile the oil is going to be. Okay? President Trump said he said he did not bomb the Kharg Island oil yet, but he's open to if they don't stop with the mines. Okay? If Iran doesn't stop with the mines over there. So if he bombs that, then we could really start getting into an oil shit show, right? But so far he hasn't. So that's going to be a wild card if he touches Kharg Island's actual oil drums. Okay. So far he's just taken out the military side of Kharg Island, but not yet the oil. If he takes out the oil, yeah, never know. $150 a barrel oil, $200 a barrel oil. We've all heard that. Okay, as possibilities. So, interesting times. That's why I say it's probably a little aggressive to be buying and playing around in these tiny time frames like this, but it's presenting a little bit of a decent demand. Now, the one thing to worry about, as always, we got to look up and to the left to see if we have any possible supply zones to bounce into that could turn price against us. Okay, if I go to a 2-hour, what have we got? We got a supply zone up here. Now, this would be a target, a profit target. Okay, if we get in down here, this would be a profit target. So make sure that we are trailing stops, or if you're one of those traders that likes to sell half your position, let the other half run, I would definitely be aware of this 2-hour supply. Now, what about right in this area? Because we do have volume spread analysis candle growth showing that there's a lot of institutional type activity taking place. So let's go down and look at here. We do have a 1-hour supply zone. So remember, the smaller time frame you get, the lower you go on time frames, the less accurate, or the less probability. Now, as you can see, we've actually kind of bounced into it. We've bounced into this candle. I don't know that I'm 100% worried about it, though, because we do have a lot of candles in over here. If I were an institution trying to short here, probably had plenty of time to put in my position. But I still want to be aware of it, and that's literally what we've just bounced into. So, yes, I did draw up this demand zone down here, but we are just about, we haven't quite touched it yet, but we're getting close, guys. Getting real close to touching that supply. So if we touch the supply and then come to here, probably going to skip this alert. But if somehow it just about faces before it touches, which I kind of doubt, it's probably going to come up just a little bit higher. Okay. If it doesn't, though, yeah, I might be interested in looking at a very aggressive position here, but probably not. Probably just wait. I really would like to see price go up a little higher, break through this area, and then maybe this demand zone would look a little better. So ultimately, yeah, to finish my thought on this demand right here, just going back to the 2-hour, really, really, really would like to see this. I'd like to see price go and close above this 1-hour zone I just drew out, and then come down to the demand zone where I could look for a buy. Okay, that's what I would be the most interested in if I could handpick what price action does from here. This is my least favorite if it just turns around and comes down. If it just goes from here and down, I'm probably just going to let it go and not even attempt to get in. This is really the only way I get into oil, is if I close above this 1-hour supply zone that we just looked at. Right here. Okay, so that's that. Last thing I'll do, guys, I'll get into more setups on Monday. And sorry, guys, I missed a couple of my slots from my personal stream this past week. I have not been able to sleep. I've just been trying to focus on getting this other position I'm after. I should know something by tomorrow. And it's just, yeah, I have not been able to sleep. So my apologies for that. Once I get this dang thing set, I should be good to go. But yeah, I should be back Monday. I'm going to start taking some melatonin or something to go to sleep. That way that way I don't have to worry about being tardy on my stream. So anyway, last thing I'll do, though, is we'll just take a quick look at the COT report and see what the big banks and institutions did. Okay, the biggest winner of all was NASDAQ, where they did increase their net long percentage, okay, by 8.74%. They are net long overall at 59.5%, we'll call it. The big winner in currency land was the Canadian dollar. Okay, the loonie got a 5.6% increase. They are net long overall by almost 62%. And then oil. There you go, guys. We got oil back. Oil 4.3% from the big banks. Remember, they're the ones making all the money. If they're making all the money, it's a good idea in general just to try to make sure whatever it is we're trading is in line with what they're doing. Right? So if they're long the CAD, might be a good idea to long the CAD. Now the CAD is probably not the greatest thing to buy right now. If we take a look over here at the Canada dollar on the heat map, they are giving us a percentage of 42%. So it's not a very strong currency. Remember, that 40 to 60% range for me is a little too neutral. It's not too strong. It's not too weak, but it's getting close to the sell territory. So yes, the banks bought, but so far all the hard data is saying not to buy. So do they know something we don't know? Is that why they ended up increasing their long percentage over here on the CAD? It's quite possible, guys. We know how insider trading works. They are privileged. They get stuff we don't. So that could potentially, be a culprit. Now, keep in mind, okay, Canada's a commodity currency with oil. So is this their way of prepping for more extended oil increases, right? Yeah, possibly. It's probably why the CAD's getting some love. Silver up 3.3%. Gold was up just a 0.5%, a very minor percent. But then flipping over to the bearish side, the biggest loser, look at the Nikkei, guys. 17% down. That's ugly. That is ugly, ugly, ugly. Japanese yen, 4.5% down. Okay, do they see some? Clearly, guys, the yen has just been weak. I know Swiss is starting to get a little bit more intervention talk as well, but the yen, this is all we've heard about the last month or so. Intervention, I call it intervention. My nose is itching like crazy. But yeah, that's not to me, if I'm looking at this, to me, that doesn't look like intervention talks. To me, it doesn't look like the banks are thinking we've got intervention coming up just yet. Now, remember, this report's accurate as of Tuesday. So we had a whole 3 days of intraday trading sessions since this report was 100% accurate. But yeah, they don't appear to think we're getting any intervention soon. Otherwise, you'd think they'd be buying the yen. But so far, as of Tuesday, they're clearly not positioning like it. So anyway, that's the yen. Dollar, very meager, 0.5% decline. So, but yeah, wow, that's a big mover. We start getting anything over 10%, guys, whether it's positive or negative on this, that's a big mover, in my opinion. So Nikkei is the biggest loser. And a lot of other currencies. Okay, all these risk-off currencies. Think about it: pound, the Kiwi, the euro, the Aussie. These are all risk-on currencies. But this is a risk-off move when they're selling risk-on currencies. Right? So anyway, there you go. And the last thing is, what else? I think that was all I had, guys. Yeah, that's pretty much it. I just thought I would take a quick overview of everything. My big winner was pound dollar. My short, I will probably try to get back into it if we can get a little bit of a retracement. Where's my stuff at? Pound dollar. Here we go. Okay. Part of the reason I got out of the trade, not only was it the weekend, and I don't want to be trying to get any big Sunday, gaps because of the war, but also we had dropped into this demand zone. Okay. This demand zone that was formed back at the beginning of December. And look at that. Okay, we dropped right into it on Friday. So that right there was the main reason to be getting out of the trade. That and the anticipation of potential Sunday caps. So I'm just looking to get back into this trade. It's still giving us a nice bearish signal over here, a -9. It is the strongest one. It is the weakest one, I should say. So I've got a supply zone up here around a 133, 133.2 level. Got a 4-hour zone here. Drop into a 1 hour. And we got a really nice 1 hour supply zone inside of the 4 hours. So I've got my alert at 133.28. And obviously in the center of that zone is our 50% fib retracement as well. Okay. So that's what I'm looking for. And I think that's probably where I'll end this video, guys. But as always, be safe, be careful. Risk off atmosphere at the moment. Hopefully we do get some de-escalation on this war at some point. But hey, while it's here, we got plenty of volatility and plenty of trading opportunities. Okay, so with that, be safe, be careful. I'll be back at 6:30 a.m. on Monday for sure this time. Okay, I'm going to force myself to get to sleep tomorrow night at a decent hour if I have to take a skillet and have somebody whack me upside of the head. Okay, but anyway, I'll be back 6:30 a.m. And then remember to find us over at a1trading.com to check our schedule. Okay, there's a schedule tab or live stream schedule where you can find us over there each day during the week as well. So with that, have a wonderful day, guys. Hope you have a wonderful rest of your weekend, and we'll see you this upcoming trading week.